Welcome back everyone, this is Spencer with Numbers of Finance, and this is a market video for Tuesday, April 9th, 2019. Starting off this video, we're going to be looking at SPY on the daily time frame. As you can see, today we had a small close in the red, nothing too significant. We can basically call this a flat close. Anything that we're looking for on the daily time frame that is technically significant would have to be a couple of percentage points movement in one direction or the other, and it doesn't have to be a single candlestick, a single daily candlestick. It can be a combination of a couple candlesticks impulsively breaking through a significant level, but we just have not been seeing that. We've kind of been, ever since we broke past this 282 triple top level, we've just been slowly creeping up, incredibly low volume, very little price fluctuation within a day or even within a couple of days. And so we're kind of waiting for that to change before we can actually see where the market wants to head. Now, trying to lay out an argument for where this market will be heading in the near term, I have the 30-day exponential moving average shown on my chart, this blue line. And the reason that I chose 30, there's nothing too significant about 30. It just does a pretty good job at showing the near-term fluctuations within the market. And it acts as we've made this point before, but the moving averages on pretty much any time frame always act as a magnet for the market, where once it becomes overstretched in one direction, it'll tend to snap back. And you can see that very clearly with the 30-day. Even before the market broke back in October, we can see it was just riding it and it was staying just above, but even when it would get too overextended, it would have a small pullback back to the moving average. And then we broke it, in which case the trend flipped from bullish to bearish. And we were heading down, we came back up and popped it a couple times, but by and large we were sticking right with it. The only one exception where we got incredibly far away from it was this waterfall selling that we saw. But even then, we can see that we had a very sharp snapback right back to that moving average within a couple of weeks. And ever since then, we've just been moving up and up and up. But again, looking at the very near term, and by near term I mean like a few days, few weeks is the kind of trend that we're looking at. We can see that we are fairly, I don't want to say significantly above it because we're not significantly above it, but we're far enough above it where it would be well within the norm to expect some level of pullback. And there's a couple ways where we could revert back to this moving average. The first one, and what I would consider to be the more likely, is to have a pullback, which is what we have been seeing. We've seen it a couple times now in this move up, where we've gotten a little bit overextended, overbought, and then we have this nice little pullback. A couple days, couple percentage points, and we pull back down to the moving average. It acts as a support, and then we continue to push up. We saw it again a couple weeks ago with the Fed pop. We got a couple percentage points away from the moving average, and we just pulled right back to it. And we're seeing a similar thing now with the gap up that we had a couple of weeks ago, a couple of days ago. We're now a couple percentage points above this moving average, and so even if you are long-term bearish, it still is well within the norms or the expectations to see some amount of pullback. Alternatively, instead of pulling back to it, we could consolidate for a period of time, in which case the moving average would catch up to it, and then that would be a very similar story where the stocks would also be coming back or pulling back to the moving average without an actual pullback in stock price. But again, that's just things to note, things to look at. And so I mentioned at the beginning of this video that we had a relatively flat day, and I thought it was kind of interesting taking a look at some of the, when you take a real close look at what happened today in the markets, there's kind of some interesting developments. The first thing that I want to point out to you is that despite the fact that SPY only closed 0.5 percentage points, and actually if we take a look at QQQ for tech, QQQ was even closer to being a flat day, 0.35, so again, fraction of a percentage point. But taking a look here, I have a list of, I believe it's the top 40 largest market cap stocks. I might be a little bit off on that, it might be 30, it might be 50, I forget. But as you can see looking at it, we have 1, 2, 3, 4, 5, 6, 7 of them that closed green, whereas the rest closed red, which, just from a probabilistic standpoint, you would think that if so many of these stocks were closing in the red, that we would have seen a much larger pullback, which is just kind of interesting to note. The one thing that I saw looking at the different price action day is that the small caps and the mid caps were really taking a much more significant hit. And so what I was expecting when I was going to pull up this list and show it to you guys is that there was going to be a few companies, a few of the really large cap stocks, really large market cap stocks that were kind of propping up the market and keeping us from seeing that waterfall selling that some of us might have been expecting. But we didn't get that. What we see here is that we're kind of uniformly slightly bearish. Most of these stocks closed within a percentage point of being flat, and just the majority of them had this small pullback, it's kind of interesting. Next up, I want to talk about a divergence that I've been seeing, and not a technical analysis type of divergence that we've been talking about with the bearish divergences. But we've been seeing a divergence between the large cap stocks and the small and the mid cap stocks. And before I actually show you exactly what I'm talking about, I want to stress some dates and talk about how this played out the last time that we saw this. And so SPY is the representation of the large cap stocks. It's the 500 biggest stocks in the world. But we can see here that before the market broke, before we had this first leg down, we could see the dates up here. This is September 20th that it made the all-time high, and then it came up and made basically a double top on October 3rd. But let's take a look at IJR, which is but IJR, so small caps. If we take a look at this, it made its high on August 27th, and then it didn't touch that high it never touched it again. Actually, we're still quite in a bear market for the small caps. But as you can see, after August 28th, it started to go down and down and down, while the large caps, SPY, were staying flat and they were still holding on to some amount of momentum. But once the large caps broke, that's when the market really started to plummet, which brought us this very significant plunge down. You can see a very similar thing on MDY, which is the mid caps, where we made a high on September 14th, just like SPY. But from there, we didn't really approach it. We had a couple days later where we approached it, but then we started to flutter down. Whereas if you remember the markets, not the markets, but the large cap stocks, they held all the way up until October 3rd, which is right here. And we can see the mid caps are already starting to plunge down. So fast forward to today, what we're seeing, bring up SPY real quick again. But maybe I shouldn't zoom in like that. But what we've been seeing on SPY is for months now, we've been seeing a very impulsive move up, and we've seen very little stall in it. We've had a couple of pullbacks, but aside from that, we just keep moving up and up and up. Now, let's take a look at what's happening with the mid caps, and we'll take a look at the small caps afterwards. But so as you can see here, after this, every single, not sector, what's the word I'm looking for? The small caps, the mid caps, and the large caps all made their low on December 24th, and they started to spike up on December 26th. That's uniform for all of them. But where we're seeing the divergence now, on mid caps, we can see we pushed up, very fast move up, and we came up and we made a high on February 25th, late February. And ever since then, we've just kind of been in a trading range. We're coming up now and we're approaching a double top that we're creating. But today we saw a significant leg down, over a percentage point close in the red. And so this looks like it might be the start for the mid caps of another move down. But again, the important part that I'm trying to focus on is that on SPY, after we got to this point on February 25th, late February, SPY and the large caps, it's the same thing on QQQ, but the large caps continue to push up and up and up, whereas we're seeing a divergence where the mid caps have kind of been flustering around. And if we take a look at IJR, the small caps, we can see they've actually started to be reverting again ever since the late February when we made that high. And so again, the last time that we saw these divergences between the different market caps was back here before the first leg down. And so I'm not trying to say that 100% this is an indication that we're going to get another second leg down. But if we do get another leg down, this is a very precise warning flag for the bulls, or people that might be thinking that we're going to be continuing this extended bull market that we've seen for the past 10 years. Nothing is guaranteed. Obviously, we might break through here. The small caps and the mid caps might start to align. But again, it's just something to note and to keep to have in your tool bag for when you're doing analysis. And the last thing we'll talk on in this analysis video is the VIX Volatility Index. We've been talking about how VIX is forming a pretty strong bullish divergence, and when VIX is bullish, that does not bode well for the broad markets, for the money markets. What we've seen recently, or actually let me start off by saying this. What we're seeing now is we have a pending MACD crossover. Actually today we made a very small green candlestick on the histogram. You can see just very slightly But it looks like there's an imminent MACD crossover, and the last couple of times that we've seen significant crossovers where we have separation, we've had just a couple of whipsaw signals, but the last 2 times I have them boxed in here, we have clear separation on the MACD histogram, and we have a multi-day spike that is about 40% on the volatility. It was the last one, and then the first one was about 30% over the course of about a week. And so again, if this imminent crossover can get some separation, I would expect the same. Again, nothing is guaranteed, but this is just the trend that we've been seeing, and you expect the trend to continue up until it doesn't. And so I'll leave you guys with that. This has been Spencer with Numbers of Finance. If you liked the video, please leave us a like and comment, subscribe. If you have any criticism or anything that you think that we can be doing better, we'd love to hear it. We love that kind of feedback. But until next time, make sure you get your numbers up.